Good day, ladies and gentlemen. So today I want to teach you a pullback strategy. Okay, this is a very easy strategy suitable for beginners and pro traders. Okay, apologies if you are hearing some kind of noise in my background. It's because it is raining right here. Okay, so let's get right into it. What qualifies as a pullback? Let me quickly explain. For those that don't know what a pullback is a period whereby you have candles moving in the opposite direction to the current trend. So let's say we are in an uptrend, market moves up, then comes back a bit, then continues. So this is what we call a pullback. All right, so for this particular strategy, what is going to qualify as a pullback is a big candle in the opposite direction or two small candles. Okay, so for the beginners, do not trade the big candles that pull back. Instead, trade the two candle system. Why? It's easier for you to see, because if I ask you to start trading the single candles, you might end up trading candles that are small. Okay, which is not the way I want it to be. All right, so for the pro traders, there are some big candle pullbacks that you can trade. Okay, but generally for this video, I'm going to treat it like it's just two candle pullbacks that you can trade. Okay, so basically, for us to qualify any move as a pullback, we need to see two candles in the opposite direction. All right, so you can see right here, price moved up aggressively, then we had two red candles. So what do you want to do? Once you have seen the two candles in the opposite direction, you want to wait for one candle to move in your direction. Initially, price moved this way, showing that price wants to move upwards, and then gave us two red candles, then gave us a blue candle. After that blue candle, which moves in your direction, you are entering. Once the candle closes, you are entering a buy trade. Okay, you enter a buy trade, you place your stop loss below that, or in my experience, I've noticed that stop loss of about 10 to 15 pips is good enough. Okay, for this strategy. Then you manage your trade in your direction. Okay, so as you can see, we would have entered right here at this level. This is the candle, this is our entry candle, and what would we have? Price danced a bit, then moved in the upward direction. Let me shift the charts. You can see what happened. Price danced a bit and moved in the upward direction. With the same strategy, I could have entered again right here. Price moved up, gave us two candles in the opposite direction. Then after this first blue candle, all right, I'm going to enter my trade at the beginning of this candle. And what happened? Price moved upwards. Definitely stop loss about 10 to 15 pips, or you can just place it below this swing. All right, and you would have made money with that. Okay, so basically that's how it worked. If you tried to enter here, you can see we had two candles in the opposite direction. Once it gave us this blue candle right here, I would have entered. Okay, stop loss about 10 pips. All right, so let's say I entered here. Let me see if I would have been taken out. Let's say I entered here. Okay, let me get another line and place it 10 pips below that. This current level is 1.2719. So 10 pips below that will be 1.2709. Let's see, 1.2709. Okay, so we would not have been taken out. You can see, but it's very close to the stop loss. So I'm using this as my stop loss level. You can see that price almost took us out. That's why I said, in my experience, 10 to 15 pips stop loss is good enough. Okay, so you also need to consider the spread. So 15 pips is safer. All right, so assuming price did not take you out, you would have caught this trade in the upwards direction. Okay, this is another entry opportunity right here. Even though you lost when it comes to that particular trade, probably you were using 6 pips stop loss or 8 pips stop loss, it would have stopped you out, no doubt. Then you see, have the same thing playing out here. Probably would have made your money back here. You can see you had an upwards move, two candles in the opposite direction. This first candle that moves in your direction, once it closes, you enter a buy trade, and you can see it still moved you in the upwards direction. If you are getting any value, please subscribe. That's what encourages me to give you all these kind of strategies. Please ignore the annotations on my charts. I do a lot of analysis on my chart, and I annotate it to help me remember, what I saw while I was trading, or probably me preparing a strategy. Okay, so what do you have? Do we have? Okay, so we had an upward move here, two candles, then we had a blue candle moving in our direction. If we entered at that point, price gave us a small buy trade, then reversed. So if you didn't get out of the trade, your stop loss will definitely get it, because this looks like a serious reversal, but it gave us some upwards move. Okay, so what do we have? Have we changed character? Let me see. Okay, I think we have changed character, because this level was broken, but it now depends on whether or not price really wants to push in the downwards direction. So let's check our strategy. What do we have? Right here I have a blue candle. Let me zoom. Okay, so right here I have a blue candle, then two red candles, then another blue candle. After that I would have entered, gave me a very small buy opportunity. Don't forget this 15-minute candle. So this very small opportunity I'm talking about would actually be reasonable, okay, in terms of how much you would have made. Okay, so this strategy is best when market is actually moving in a certain direction. It's not too good when market is consolidating. All right, so if you got any value, please subscribe and turn on the notification bell. I'll see you in the next video. Thanks for watching.